Busy, busy, busy. A big turnout. Guess how much I traded last year? I'll show my 1099 once I get it in a couple weeks, but real money trades, my busiest year ever. I did over $23 million worth of trades. Thousands and thousands of trades. I'm a real money trader. My pet peeve is educators that don't trade, because that's most of them, right? I know this reviewer, Emmett, who actually I like. He said I was only one of only 5 educators in the world who could verify I actually really traded and had a profitable year at least with it. So anyway, I did over 20. I did not make 23 million in profit, but that's the amount of trading action I got last year. And so I did $23 million worth of trades. And that's proof. That's from the Fidelity account, right? It's the real deal. And my point in bringing that up is to let you know that I do have a lot of experience that I hope can help you make better winning trades more often. Bigger winners more often. And figure this all out. So a nice turnout. We'll get underway here in just a few minutes. Wanted to welcome you all to our live Trading Week Ahead broadcast, doing these for the last 12 years or so. So that's, as you can see, that's year 2021 from my Fidelity account. That's the established credibility part of this presentation is, hey, the guy actually really trades. Well, S&P looks like it's in no man's land. We'll see if it continues to drop and chop. I don't foresee a rally up to new highs. I don't think that's in the cards. We have so many factors against the market, but hey, we'll see. I correctly told you, did I not last week, it'd be a smart time to go to cash, and if you went to cash, congratulations. I don't have any stocks in my portfolio other than my inverse ETFs, and I'm relatively light in those because I'm not convinced the market's going to keep dropping unless we get under the 100 SMA, under the 4550 region, so we will see. Anyways, I hope that y'all are doing well in your trades. What are you guys trading lately? Let me know. And I'll pull up some tickers, charts of your choice. I still like Ford Motor. That's my favorite. And we'll cover that and more coming up in today's broadcast. So we get underway here in just a few minutes. Hey, Polly, we'll pull those up. Thanks. Remember, range and risk management is everything. And like I had mentioned in my earlier presentation this morning, always look at your trades like sequences. Hey, Wendy, will do. Look at every trade not in isolation. Your trading decisions should be seen as, it's like, hey, I want to go long Ford. I'm not just going to take one shot at it, and that's the trade, and dun, 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 dun. If it doesn't work, then give up. No, you expect most of your trades not to work out. What you do is make money by sequencing into trades or position sizing or scaling. So you're putting on every trade decision, particularly nowadays with good volatility. I've made the most money, and my biggest winning days lately, it's always a rack of 3 or 4 or 5 trades. So I'll put in sequential trades with a combination of both hard and trailing stops. And like half of them will chop out and all that. Some will get taken out, some will chop. Have small wins, small stops, and break-evens. The goal, though, of the rack of trades is to make some money net when all's said and done. After 6 trades, hopefully you're in the green, even though half of them might stop out or chop out. That's a marked difference from how I used to trade, where I used to try and overthink it and try and use squiggly line indicators and make the big trading decision, bum, 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 bum. And that's not how you day trade or swing trade. Hey, Wendy, good question about Ford. We'll look it up. I'll pull that up in just a minute here. A question about where would I sequence into it. As a rule of thumb, I like every $2 for stocks and ETFs in the $20 to $40 range. I scale every $2 as a rule of thumb, so we'll take a look. Well, what a day. What a day, what a dollar. It's been quite the busy week. Well, good to see a big turnout. We'll get underway here right now. So, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, president of Day Trading University and Trade Mastery, coming at you live here on Saturday, January the 8th. it'll be my birthday, my 58th birthday on the 19th. So just 11 days away. I'm a Capricorn. Anyway, getting close to 60. I'm getting old. Getting old sucks, right? Because energy isn't what it used to be. Pull this chair down a little. All right, anyway, let's get on with it, Calhoun. All right, here's our S&P. Remember, my favorite momentum up chart pattern with candles is small followed by large whole real body. The flip side just occurred in the S&P as we have a small followed by large epic drop whole real body. So that kind of puts in a fear into the minds of active traders, right? So we're very price action and fear and greed driven. The fact that we are at the 50 SMA is not particularly noteworthy. It just for FYI, I think what the street's looking at is will we lose that 44, 45, 50, 100 simple moving average? And I say, to confirm a bearish correction is underway. If it does occur next week or the week after, whatnot, you want to see a minimum of 3 days. This is a rider downer. This is very valuable. You have my word on it. I know how to trade. 3 days under the 100 SMA and market's toast. So that's what you're looking for. Preferably sequential days. So if you have 3 or more days of price action under the S&P's 100 simple moving average, which is roughly 4550, if we have 3 days in a row, then you definitely want to be in the inverses and buying puts and out of equities. Okay, so I'm using 4550. The 100 SMA is the key S1 level. It's kind of noise in here. Signal is down there. And I'm very confident that's what any of you who may be institutional traders or my institutional guys or market makers or specialists and all the home retail folks as well, that's the signal. 3 days in a row under the 100 SMA. Remember I said that. And I'll say I told you so, right? In the month when it's down. And anyway, resistance is obviously up here near the 4830. I'm not thinking we're going to get a big rally up. With so many problems out there in the world, we want to be careful. Now, having said that, my favorite stock in the world is still currently Ford Motor. I've been calling it along for you folks here and for my live room members for the last couple of weeks. And ever since 21 was the long call for Ford. So it finally did break over that and it's up. We have that momentum pattern, small followed by green, large whole real bodies on the uptick, but it's offset by a shooting star right here. So when you wish upon a star, you don't trade it until it goes far. So we want to get over 2550. And to answer Wendy's question, personally, I would look at buying this at 25, not a trade recommendation, but I would be looking at 25.7, 27.7. We don't buy the 9s, so it'd be 25.7, 27.7, and then 30.7. Remember I said that. Those would be the trigger points for this. Remember how successful my calls have been. So just write that down. Ford is along over the 25.7, 27.7, and 30.7. And who would have thought forever it seemed Ford had languished under $10 a share for years and years. I used to work for Ford as a quality engineer and a statistician in the early 90s, and very grateful for that opportunity because a lot of smart people at the Ford Motor Company. It's the best company I ever worked for is Ford. Ask anybody in Michigan, they say Fords. They like the possessive, like it's Henry Ford's company. They say Ford's treats their employees right, and that's true, they do. Anyway, and with the EV on the road with the F-150 Lightning and other models coming to market this year, should be a great year for Ford. Think Tesla, but early cycle Tesla, right? So, and I'm completely serious about that. And I like Ford a million times better than Tesla. I'd short Tesla, I'd go long Ford. Anyway, Pfizer looks good if it breaks over the 62, around the 50 to 60 region. Now, this particular chart illustrates a very valuable concept that you may have seen me publish on in Stocks and Commodities or speak for in Money Show. And I am speaking for Money Show next week, so be on the lookout for an email from me for the Virtual Traders Expo coming up 12:50. Write this down. Wednesday, January 12th, I'll be speaking at 10 minutes till 1 East Coast time, 12:50. So January 12th at 12:50, I'll be speaking with live day trading market charts. So anyway, this illustrates a good concept. Just like in day trading, I like buying right above a whole number and then selling into the 90 cent mark right under the nearest whole number, like buy 21.10, sell 21.90 kind of thing. Same is true for your swing trades. using multiples of 10. So this was a long over the 50, right? Yeah, Pfizer I called the long of 51. Remember, if you were here for the last couple of months, you know I called the long of 50, right over 51. Anyway, 51 was a long, and the sell was triggered right at 59. So it's playing within the 10-point region of the 50 to the 60. Now, with this chart, we obviously don't want to buy it at all until it gets over 62. You could take a shot over the 57, buying a bounce and a pullback, but personally, I'm not going to trade this until it breaks the 62. But that's the round trip, is long right above a multiple of 10, like 50, and then sell right under 60. Next step would be, say, buy the 62 and sell the 69, right? That'd be the exit target, would be right under 70 if it does get to the 62 for our entry. So that's what's next. And we looked at the S&P. Let's take a brief look at the VIX. Our CBOE Volatility Index was up sharply on Wednesday, and you can see that's that same pattern that I love. Small, followed by a large whole body green candle. We want to see if it holds above that, over the 20, looks like right over 21's resistance. So I'm sure that's what the street's looking for next week. If VIX breaks 21, watch out below. This is inversely correlated with the broad market. So when the VIX is up, the market's down. And we'll see if the VIX spikes over the 21 for a bearish correction start. We don't want to be shorting the market, or at least I'm not going to be going long in my inverse ETFs that go up when the market goes down, nor am I going to be shorting the broad market unless the VIX gets over 21 again. Just over 21, like 21.20. That's the technical resistance in the VIX. So we'll see if it breaks that. Anyway, it's on the mend. The VIX is taking out a 2-week high. That's important. If you look on the candles, that's a 2-week high in the VIX. That's important. Okay. What else? Let's take a look at some charts here. Some of you good folks had asked about some charts. Let me pull them up for you. See, a trader had asked about LAND. Yeah, that's a great chart. Good pick. I like that. Not here because it's it's going back down. But if it does get over 35, that's a brilliant chart. That's a really good looking chart. Well done. Because it's clean, it's wide, it's tight, it's multi-point. We could have made a lot of money hopefully we could have all made a lot of money if we'd bought, and again, over the 25, 26, all the way up to 34. So nice run in land. So yeah, I approve. That's a good chart that I would be. Actually, I'm going to keep note of that. I'll trade that one if it gets over the new high, break over 35.50. Good chart. I see a question from Bill. Do I use percentage stops or dollar amount? It's always dollars. I have no idea what the percentage values are for anything I trade. I always buy based on dollar hooks, on dollar price action. Let's see from Steve. Hey, Steve, as a protective stop, do I generally prefer, say, 30.10 or 29.80? Always the 29.80. Always right under the whole number. So I buy above, say I buy 30.10 or buy 30.20 on a move up, and if it goes up and parabolic arc and comes back down, my maximum stop would be 29.8. So right under, use whole number ledges, right under the whole number for a stop and right above the whole number for a breakout. Let's see, what do I think about LI? Not much. That's an example of a terrible chart that nobody should trade in life. This is a perfectly terrible, horrible chart. As opposed to Wendy's, see, look at the difference. Kind of like an eye test. Which one's clearer, A or B? Now that's a god-awful chart that no one in their right mind should ever trade, right? This is a perfectly terrible chart. Because it's choppy. Odds of making money in this chart are 0 and less than 0. So only trade when you've got an edge, right? Let's see, Bank America, let's take a look. BAC. That's actually pretty good. I like, now, you know what I say about not buy 9. So where would be the earliest you would buy BAC? That's actually pretty good. It's got a really healthy last week in spite of the market drop. So banking and finance looks good, right? Remember Kramer had said that too, I think. Anyway, yeah, Wendy got it right, just over the 50. So that is good. We don't buy the 9, so I would not buy it here. Because you know it's going to run into overhead resistance at the 50. The preferred setup would be for it to go from here up to just around the 50, shake and bake, pull back a little bit, and then punch on through. And that's where you take the trade. But yeah, it's a good chart. Not a great chart, but it's a good chart because of the recent large green candles. This also illustrates a good momentum play in the playbook. Is you want to give preference to charts with big ass green candle. Well, it's not a good technical term, but larger than average green candles, especially on high volume. Just not high volume, but respectable volume. Large green candles lifting it up, so that's a good chart. Let's see. Wow, a lot of questions. Let's see the SQs. I'm long TECS myself right now. And again, small followed by large. That's another way to trade short the NASDAQ. This is a technology inverse. I'm staying clear of the things that I normally trade in January for the wash sale disallowance, saying I've got to take a break in January. But SQs is brilliant. I was trading back in the 6s. Definitely a good long over, not a trade recommendation, but I'll be looking to go long over 7, like 710 or so. But yeah, SQ has a lot of upside, and technology is the weakest sector lately. So shorting the NASDAQ by going long either SQ or, I like SARK too, the Kathy Wood inverse. Short her. Boom, nailed it, baby. And I've been trading this one. I told you guys SARK was good, right? I called it for you guys this whole past month or so. Anyway, SARK is another way to short technology, and that's a recent IPO. That's why it only has data back to November. But the SARK, it's short Kathy Wood. The SARK chart is brilliant, and that's a wonderful chart. Looks great over 42.50. So to short technology, we want to go long in SARK and others. Let's see, where's my cursor? Okay, what else do we have? Other inverse instruments of note, VIXY or UVXY or VXX. Any of the VIX ETNs looks good here, especially if they recover their 50 SMAs, right, over 17. So I'm going to be putting size on VIX over 17. The short Dow is another good way to play a drop in the Dow, right? So if the market starts to correct, the wonderful thing about the inverses here is that they're at or near 52-week lows, so they're really cheap, comparatively speaking, and they have lots of upside. So you have minimal risk. The price that proves the trade wrong, to borrow a phrase from my colleague Steve Nissen, the price that proves this trade wrong for a bounce would be 24.50, right? So I throw darts at it, and I'll stop out if it gets to 24.50. I'll scale in above the 27.50 and again over the 30. So S-Dow looks good. So if you want to short the Dow, that's one way to do it. And if you want to short the S&P, we can use that. Now, one thing I want to show you is the upside. One thing to look for when bottom fishing is large volume that's green on a pivot, right? So you want to make sure that you're, having been on both sides of it, you want to make sure that your trade is being supported by Wall Street, meaning institutional trading volume is buying up, in fact, and drying up supply at that price because they want to sell to someone else up higher, like we all do, right? So buy wholesale, sell retail. That's a brilliant freaking chart for a breakout to the upside above those moving averages over the 14, over the 1650 or so. So that's how to short the S&P, is to go long SPXU. Okay. That's the 1 year. LabD has been particularly strong lately too. That's the short biotech. I don't know why they're shorting biotech. You would think that healthcare related sector and biotechnology would be on the strong side, but it's not. They've been shorting biotechs aggressively last week. I've been trading LabD and loving it. It's had really good days, LABD. And that's the kind of chart that we cover for our members for day trading and swing trades in the live trading room. So anyway, but that's LabD. Welcome to all of you who've just tuned in. Just a reminder, this is on the front of my Trade Mastery site. I just screen capped this last week. I did over $23 million, and here's proof. It's honest, the truth. It's I don't make this shit up. It's the truth. The screen cap for my Fidelity account, I did over $23 million worth of trades last year. That's my most active year ever. Thousands and thousands and thousands of trades. I didn't make $23 million in profit, but that's the action. And the reason that I share that with you is to share with you that I am a real trader, and I'm a very aggressive trader with a lot of depth of knowledge of what works and what doesn't. And that's what I sell, basically. I sell my lessons learned. That's what I offer to the trading community, is lessons learned from a real trader, not one of these wannabes like my competitors that pretend to trade, or they say they trade low float small caps in overseas brokerages or all that kind of crap, and front run their members and all that BS. I'm honest. I trade a lot. I trade very aggressively. And the main thing is I hope that I have something I can genuinely share with you based on all that experience, right? That's a lot of freaking trades. I day trade, on average, I would say maybe 30 to 50 day trades daily. My most aggressive day is like 104, 110. Least aggressive is maybe a dozen. But on average, I do anywhere from maybe 30 to 50 or so. I'm trying to remember at least several dozen trades daily. So I have a lot of experience to share with you. And that's why I do so much trading, is to try and make more money for myself, and also to capitalize on my lessons learned by teaching you guys the difference between what I found works and what doesn't. So, and again, for access to the live room, you want to go to my Trade Mastery site. Newly updated, right? There's me. And what you want to do is go to the live room link at the top of Trade Mastery, and you'll be able to sign up for a trial there and take it for a test run and see what you think about my alerts. I give specific entries with specific price points. Okay, anyway, back to our regularly scheduled program. What else do I have to share? Wow, so many of you here. Freeport, let's see. FCX, it's all right. I like it for day trading better than swing trading. Again, this is an example. Unlike the earlier chart you mentioned, the land one, I'm sorry. This one is kind of choppy. Again, you want to make life easy on yourself. Trading is extremely difficult, right? I'm obsessed with trading. It's what I live for. And jazz. I like jazz and trading. And my family, of course. But choppy charts are tough to trade. Clean charts are easy to scale into. Remember, all your trades should be done with, in the back of your mind, of position sizing. And again, learn position sizing from my colleague, Dr. Van K. Tharp. And you might want to get his book, Trading Beyond the Matrix, or some of the other position sizing and scaling books that he's published. Very helpful. You need the insight that every trade should be just seen as the start of a, kind of like a story, with a beginning, a middle, and an end. You don't just put on one trade and hope, because we all know that doesn't work. What you want to do is put on a sequence of 3 or 4 or 5 trades spaced out for swing trades every $1 or $2, for day trades every 20, 30 cents, or tighter if you're trading cheap instruments, and play it from... Oh, hey, Pete. Yeah, Pete, I think I did... Pete saying, let's see. I did send you the access, I believe. Click the support ticket. I'm a one-man company, so I take care of everything, and I'm pretty sure I got you taken care of. Just click on the help tab at the bottom right of any of my things, and I'll try and remember your name. Just email me, ken@trademastery.com, and I'll get you taken care of. Hey, Manoj. You're saying you're unable to join membership for January. Link wasn't working. Folks, if you ever have any difficulties of any kind, I'm very conscientious about customer service. Do just click. The thing is, click the Zendesk Help tab. I don't have the website up anymore, but go to trademastery.com. At the lower right, on all the pages of all my websites, there's a Zendesk Help tab. Click that and contact me using that, because that'll get through the email filters and spam filters that a lot of you with other email addresses have. So. Let's see. Someone asking about URA. Sure thing. Let's pull it up. But yeah, happy to help out. That's in the middle of a range, so personally, I don't really care for that one. Let's switch over to some day trading charts, because we only have a few minutes left. But yeah, Peter, do apologize if you didn't hear from me. Check your spam. Oh, by the way, Always check your spam and trash folders. I always answer every email within 24 hours, 100% of the time, without fail. So do check your spam and trash folders. And just a note that ISP-based emails like Comcast and AOL and SBC Global and all that have really terrible deliverability, and they often block my emails. So that's why I use the Zendesk support tab where it says help. Click on that, it'll pop open the thing, and that will hopefully get through your ISP. Now let's take a look at some intraday charts. GameStop had a good day yesterday. It gapped up, it ran up and pulled back down. It bounced off the previous day's high, and that's a common pattern. Bed Bath & Beyond was volatile on Thursday on the earnings release, but didn't do too much Friday. One sector I urge y'all to pay attention to this upcoming week is the cannabis sector. After being obliterated this past year or so, it's alive. Zzz. So my favorite cannabis stocks are CGC, Canopy Growth, and Tilray, TLRY. And they're both at or near 2-day highs. So keep an eye on Canopy and Tilray. Another one to keep an eye on is Virgin Galactic, SPCE, the ticker. It's way down at $12 a share. Used to be a lot higher. Again, any chart for swing or day trading where it's taken out and closes, the important thing is where it closes, not so much where it opens. That's sort of important, but where it closes is the most important data point, because that's what institutional traders use. SPCE did close slightly above the previous day's high, so do keep an eye on Virgin Galactic for a swing or a day trade, SPCE. And Peloton's another pick, PTON. Again, the same pattern. Do you see how it closed at a 2-day high? So that's good. Hey, Steve, let's take a look at some other charts here. So those are a couple of picks, folks. Keep an eye on Canopy, SPCE, and PTON. Let's get back to our swing trading charts, and we'll wrap up here in just a minute. And thanks to so many, well, big turnout. Wow, really big turnout. Thanks to so many of you for being here. Peloton got obliterated, right? Now, for the fellow candlestick traders, and be sure to learn candles exclusively from Steve Nissen at candlecharts.com. Everyone else who teaches candles, I won't say bad things, but you want to learn from the best, right? So anyway, learn only from Steve Nissen. What's the candlestick pattern? Kind of, sort of. I'm noticing maybe it's not exactly, but what does it kind of, what's it close to down there? Yeah, Ian got it right. Oh, thanks, Wendy. I'm not familiar with that one. It's close to a bullish engulfing, right? As Ian said correctly. That's a bullish. It's hard for me to see if that, it looks like it may not technically be exactly a bullish engulfing, but it's really close. We have 2 green candles in a row, green volume days, and it's kind of a bullish engulfing. And Peloton was, back in July and summer, last summer, it was a $120 stock. Now it's a $30 stock. This may easily not get back up to where it was, but maybe do a nice recovery. My exit target would be 55. So if I buy this at, say, 37, again, not a trade recommendation, but if I were to buy PTON at 37, I would tighten up a trailing stop actually right near the 50, because again, that's a decade value. Best case exit target would be 55. So that's a good setup for PTON. Yeah, and a good downward channel that's trying to bounce. Let's see, someone's asking about BBL. Let's take a look. Bravo Lima, BBL. Yeah, it's got a good trend. It's a pretty good chart. Let's see, someone's telling me about MSOS. I'm going to wrap up here momentarily. I don't see the love. Well, I'm told it's a cannabis stock. On that one, I'd wait till 27 or so. If we look at gold, gold has been notoriously difficult to trade this whole past year or so. We haven't had any strong trends up or down in gold. Oil's been a little easier, a lot easier, I should say. But again, my favorite swing trading chart for the year is the Ford Motor Company. A nice clean chart, right? A nice well-behaved chart that you could have scaled into continuously and done really well with. So I'm a big proponent of Ford, not just because I used to work there as a statistician back in the early 90s, but because price action is up. I never recommended Ford back 10 years ago or anything, but now it looks really good, and it's definitely an EV play with the Lightning and the others coming out. I know I'm not in Ford right now. I'm not in Ford Motor Company right now, and that's because of the wash sale thing. I have to sit out January. Let's see, U.S. Steel. Hey, Manoj. It's a reopening play, but it's kind of directionless, choppy, sideways. So it's in a recent uptrend. It's got a bearish upper shadow near the 26, but I think there's better charts. It's okay, but there's better charts out there. I like it for day trading, though. X is really good for intraday trades, but not so much for swings here. Let me see what else. Trying to pull this up. I want to remember trader's name. Peter, I'm taking note of your name here off screen so I can, but do please check your, if you signed up and didn't get your, I got a lot of people signed up lately. If you did sign up and did not get your access to the live room, my apologies. Do be sure to check your spam and trash folders, and I will resend to you as well. Let me. Okay, I took note of your name, so I will be able to follow up. What else? I think that's about it. I scrolled up and now I can't scroll back down again. Let's. All right, Patricia. Yeah, DraftKings, how the mighty have fallen, right? I remember back, I think it was when it was 60 or so. If you look at DKNG, yeah, that's good. Yeah, I remember in the 60s, and then it did a nosedive. I like that reversal pattern. That's fine over 30, right? Again, not a trade recommendation, but if I were to trade it, which I likely will if it gets back over 30, I'd go long at 30.50 with the hard stop at 28. Exit target would be right under the 40. This would be a really good candidate for that $10 band strategy where you go above the multiple of 10, somewhere over 30, right? Once, like Kilroy was here, right? Once it gets right over the 30, it peeks its head up, not right at 30, but like 30.5 or 30.7 or whatnot, with a hard stop at 28. So no more than a $2 or $2.50 hard stop. An exit target would be tightening the trailing stop the closer it gets to 40. So if I buy 30 and sell 39, that would be a really good trade in DraftKings. So that's a good chart. And yeah, good point. A question about why would I not get out at the MA at 34.90? I would tighten in the trail stop. Hey Manoj, my email is click on the help tab at the lower right corner of my website, or ken at trademastery.com. But if for any reason you have not heard back from me, instead I urge you to please click the help tab, HELP. It's Zendesk, and they get through all the spam filters from a lot of the ISPs. So and go to trademastery.com, wait a few minutes, go to the bottom right, and there's a oval tab that says help. Click on that, and it'll pop open a little box. Put in your email address, and I'll get back to you. So it's your thing. All right, well, I think I'm going to wrap up here. We're just about out of time. Thank you so much for your enthusiastic and big turnout of enthusiastic comments, and I wanted to wish all the very best for a successful trading year ahead. You have my word. I work really hard. I'm not one of these BS con men in the education industry. I'm the real deal. I've made every mistake in the book and then some thousands of times, so I've learned hopefully I've learned from my mistakes. Do any of you have any New Year's? I don't like the idea of New Year's resolutions because they're kind of meant to be broken, right? But if I had to have one, it would be because I overtrade in the middle of the day. I shouldn't even be trading after 11. I even have signs made up to try and remind me. No trades after 10:30. I'm notoriously bad at following my own advice sometimes. I have another sign made up that says, and I got these made up on eBay from the sign makers. Stop overtrading. So those are a couple of New Year's resolutions that hopefully I'll get better at. when I look at my P&L and I look at all my winning trades versus my stop losses and my break evens, I almost never do well trading between 11 and 3. So I need to really stop that. Just because the Wall Street casino's open doesn't mean you should go in there, right? So anyway, the trade when the odds are in your favor, and that's during open range breakouts in the first hour, and sometimes the closing half hour for short squeezes or breakout runs. So good stuff. But yeah, I like DraftKings. Thanks for telling me about that one. That's good. I hadn't followed DraftKings since it was in the right under 60. So now it's it's looking a little. It's still in a dead cat bounce downtrend. But if it gets over 30, that will be a break of the previous swing low, which will be a break of the downtrend. So north of 30 looks good for DKNG. Yeah, it's hard to believe it's way down at 26. Now, do keep an eye. Now, how to say? I'm not going to be going long swing trades for a minimum of the next 2 weeks or so, because I believe that if the market is likely, and this is important closing thought, if the market is in fact due for an 8 to 10% or more correction on the heels of the last week, which is a red week, that may accelerate into next week, right? If we look at the stock market itself at the S&P, you can see we are in a downtrend, or I should say a pullback off the uptrend, in a downtrending S&P. And if we kind of zoom in for a close-up look, again, the key support level is the 100 SMA and the resistance is up at the high. We want to see what behavior the market has next week. If it does, in fact, start to plummet down, I'm not going to swing trade stocks to the long side. That would be fighting the trend. And so you want to be in the trend of things like inverse ETFs that go up when the market goes down, or exceptional charts. So trade with patience. That's a good one. All right. Well, you guys take care. You've been great. We're at 10:30, so our time is sadly at an end. I'll see you guys next time, and trade smart, play it safe, and look for bounces in the inverse instruments. My favorite is TZA, or Russell Small Cap. Small caps are often the first to fall when the market drops, and technology. So TZA and SQQQ are the likely two best inverse plays for next week. And volatility, too, if UVXY starts to spike. So with that, I'm going to wrap. Thank you for being here so much. I do appreciate it, and I will hopefully see you in the live room. Go to trademastery.com, and I will see you next time. So bye for now. And thanks. I appreciate all the comments. All right. I'm going to wrap up. See you next week. Goodbye. Take care.